We're just a few days away from President Trump's new tariffs being announced and many going into effect, including what would be a 25% levy on all automobiles that are not made in the United States. Megan Casella's tracking all of this action for us, of course. The market very focused on it, Megan, as we count down to Wednesday.
Absolutely, David. A long way to Wednesday. That auto parts tariff you mentioned already signed into law, but that leaves the biggest question for the week being what exactly those president's reciprocal tariffs are going to look like. And one thing that we do know now is just 48 hours from Trump's self-imposed April 2nd deadline for those is that the plans for Wednesday are still very much up in the air. Listen to what the president's economic advisor had to say yesterday on the path forward.
I can't give you any forward-looking guidance on what's going to happen this week. The president has got a heck of a lot of analysis before him, and he's going to make the right choice, I'm sure.
So a very clear signal there that the path has not yet been decided and only the president knows what is next. But we can expect 4 pieces to the tariff wave on Wednesday. Those are the still unknown reciprocal tariffs will be rolled out. That secondary tariff on buyers of Venezuelan oil will take effect. The auto tariffs, of course, will take effect. And the president will decide whether to let the pause on those Canadian and Mexican tariffs expire as scheduled. A White House official here told me the president has yet to make that call. And so with so much taking effect at once, Trump trade advisor Peter Navarro over the weekend said that he expects the tariffs to raise $600 billion in revenue every year. And that sparked widespread speculation that the president could be planning to go bigger with the reciprocal tariffs than we had recently been thinking. For comparison, $600 billion a year, that is more than the U.S. took in corporate taxes last year. That would be roughly the equivalent of a 20% tariff on everything that the U.S. imports. We don't know that that's where they're going, but a lot of speculation there. That might be the end result. So the upshot, guys, I would just say is that April 2nd, that Wednesday, looks less and less likely to deliver the clarity that the market has been hoping for. Guys.
Yeah. Megan, that was the subject of our conversation at the top of the 9 a.m. The lack of clarity, I think, that many investors are now starting to concede is likely to come. And again, you make the point. I mean, the president's going to have it all in front of him. He likes to have that optionality. He likes to be the ultimate decision maker, and not just on any given day, but every day. And so I guess the question is, what are we going to get on Wednesday, but what are going to be the key components of it that mean it could go up or could go down or be rolled back? Is that potentially going to be a part of whatever the discussion is?
It sure could be. I was surprised to hear from that White House official that I mentioned that the pause on Canada and Mexico, it's already been written into law that will expire on Wednesday. I was then told that maybe that won't happen. So that could be a way that maybe he softens the blow of the reciprocal tariffs is by extending the pause on USMCA compliant goods from Canada and Mexico, even while rolling out what could be much larger tariffs to come. David, to your point, I think there's a couple things going on here. One is that the president likes this optionality, and I think a lot of this uncertainty is by design. This White House thinks that it gives them ultimate negotiating power with trading partners if those countries don't even know what to offer, that they're just sort of offering anything they can to try to get around this, and they sort of like some of the confusion. The other thing is that it appears to me that there is very much an internal debate on this White House going on about what exactly would be the best path forward to limit some market uncertainty or limit the hit to economic growth while still having maximum impact and fulfilling the campaign promises that the president ran on.
And that uncertainty also feeds a lot of business and household confidence or lack of confidence. And that's the issue we're dealing with on some of these renewed economic projections. Megan, thanks. Megan Casella.